Okay, so some big changes are coming to the Consumer Financial Protection Bureau, or the CFPB. Russell Vought, who was recently appointed by President Trump to run the Office of Budget Management for the White House, he's making some major changes and moves that could reshape consumer protections as we know them. What does this mean for you, your money, your loans, and your overall financial rights? Let's break that down. So, the Consumer Financial Protection Bureau, or the CFPB, was created after the 2008 financial crisis to protect everyday Americans, like you and myself, from predatory financial practices. But now, under its new leadership, the agency is taking a very different approach. Some are calling it a much needed reform, while others see it as a dangerous rollback of consumer rights. So, what exactly is happening and how will it affect you? Let's take a look. Before we get into what's changing, let's quickly go over what the CFPB actually does. The agency was designed to keep financial institutions in check, and it focuses on things like mortgages. It prevents unfair lending and predatory practices. Credit cards, it stops deceptive fees and surprise rate hikes. Student loans, it cracks down on abusive loan servicing. Debt collection, preventing harassment and unfair collection tactics. Banking and loans, and ensures transparency in banking fees and lending. Very important things. The CFPB has been known for investigating big banks, issuing fines, and creating rules to protect consumers. Over the years, it has handled major cases, including cracking down on fraudulent mortgage lending, deceptive credit card practices, and unlawful debt collections. In fact, the agency has returned billions of dollars to consumers who were wronged by financial institutions, but now that mission is looking like it's going to take a major shift. Russell Vought, the new acting director of the CFPB, is taking a drastically different approach. On his first day in office, which was a weekend, and this new Trump administration is being known to make some big moves on the weekend, he's done the following. He's halted all new investigations and enforcement actions, paused new consumer protection rules. He's refused to request additional funding from the Federal Reserve, saying the CFPB has enough cash already. He's rolled back regulatory oversight on financial institutions. Vaught argues that the CFPB has overstepped its powers for years, which many Republicans also agree with. And this creates unnecessary burdens on businesses and limiting free market growth. But that doesn't actually speak to the effects on consumers. Supporters of his policies claim that reducing government intervention in financial markets will lead to more competitive rates, increasing lending opportunities, and an overall boost to economic activity. However, opponents counter that deregulation could allow financial institutions to engage in predatory practices without fear of consequences, like we saw with the financial crisis in 2008. He wants to scale back regulations and make the agency less aggressive in targeting banks and lenders. But critics are saying this means less protection for us, the consumer, and give more power to financial institutions to operate essentially unchecked. So, what does this mean for you and me? Well, it depends on who you ask, and let's break down those potential impacts. For businesses, this could mean fewer regulations, making it easier to operate without worrying about the CFPB investigations. Some argue this could help the economy grow. For consumers, that means less oversight. It could mean banks and lenders have more freedom to charge hidden fees, raise interest rates unfairly, or engage in just risky financial practices overall. For student loan borrowers and credit card users, if regulations are rolled back, we could see less transparency in lending and fewer protections against shady loan practices, which, we're all glad not to have anymore. Consumer advocates are warning that the CFPB was created for a reason, which is to stop this kind of financial abuse that led to the 2008 economic crash. If regulations continue to be rolled back, we might see a return of high-risk lending, hidden fees in banking, and aggressive debt collection tactics. Some financial analysts argue that without strong oversight, consumers are going to bear the brunt of these financial practices with very little recourse. If Vought's reforms go too far, some are worrying that history is going to repeat itself and we're going to see that 2008 crash again very soon. So is this a much needed reform to cut red tape or a dangerous move that's going to leave consumers very exposed? What do you think? We'll chat soon.